Okay, hi there. Welcome to another in our series of videos looking at the economics of growth, the growth of GDP. This one's going to take a little bit of an applied look at the UK economy and focus in particular on some of the key factors that might limit or hold back the growth in a country such as the UK. Indeed, the UK economy is a relatively low growth country, particularly obviously if you compare our growth with emerging economies. But also critically, actually, our growth rate is, in the long term, a little bit below the average of high-income nations. On average, our trend growth, stripping away the economic cycle, the trend growth of GDP in real terms is just over 2% per year. Here's the chart showing the UK economic cycle, the cyclical path of GDP, the index of GDP, of course, showing the recession following the global financial crisis at the back end of the previous decade, then a period of steady growth, but then, of course, hit by the impact of the pandemic. There was a fall in real GDP of 10% in 2020. The economy is now picked up to where it was in 2020, but obviously still below where it might have been had growth continued on the path before 2020. Well, what factors have tended to hold back economic growth in the UK? Keep in mind that the UK is a relatively slow growth economy. This chart just picks up the annual growth rates that actually happened from 2016 through to 2021, and then some forecasts which are published each year by the IMF all the way through to 2026. Now you can see that prior to the pandemic, the growth rate was less than 2% per year, indeed dipping below 1.5% in 2018-2019. Then the collapse in output in 2020, two relatively strong years, 2021 and forecast this year. But again, it looks as if we're reverting back to relatively slow growth of GDP. So what are some of the key factors? Or what I've tried to do here is I've picked out what I think are 10 factors. Of course, you don't need all 10 for an essay, but hopefully these might be useful to maybe take a screenshot of or add to your revision notes on this key topic. I've deliberately limited myself to 10 because potentially there's many more and some of them are linked. But let's work our way through them and see some points of interest. I think a key factor holding back growth for the UK is relatively low capital investment as a share of GDP. So capital investment in things like infrastructure, new buildings, factories, plant and machinery, hardware and software. In the UK, investment, both business and public sector, is less than 20% of national income. And that's relatively low by international standards, certainly in comparison to emerging market countries. Linked with that, point 2, is that our research and development spending, R&D, is also low. It's less than 2% of GDP. And that's a big contrast to countries such as Israel and Finland, Germany and South Korea, for example, where R&D spending is significantly bigger. And that has clearly implications for invention and innovation at the cutting edge. The UK economy, I think, is also held back by decades of public underinvestment. There hasn't been enough investment in transport, in healthcare, in education, in logistics, in port facilities, and so on. And the legacy, by most people's criteria, is a large infrastructure gap. The UK economy is held back by weaknesses in rail transport, potholes in the roads, slow broadband, all kinds of things which add to cost and increase the frictions needed to overcome if you want to trade successfully. In terms of skills, it's pretty widely acknowledged by report after report that although we have some world-class universities, when it comes to vocational education, level 4, level 5 qualifications, for example, the UK simply does not have enough skilled technicians for the jobs available, particularly in things like maths and sciences. And those skills gaps also feed into, along with underinvestment, feed into the persistent productivity gap with leading competitor countries. I'll show you some data on that in a second or two. So our output per person employed, our GDP per person hour worked, is quite significantly lower than many of our competitor nations. I think some stats showed that the average German worker produces in 4 days what it takes a British worker to produce in 5. Britain has a persistent trade deficit. X minus M is negative, and those of you who know your macro, if you're running a big trade deficit, that's a negative for the circular flow of income. It's a drag on demand. And other people argue that the UK economy's growth is held back perhaps by an over-dependence on financial services, banking, insurance, foreign exchange trading and so on, and that our manufacturing sector, the industrial sector of the economy, has been allowed to deindustrialise, to shrink both in relative and absolute terms, such that manufacturing is now only really about 12-13% of the national economy. Is growth held back by relatively weak growth of median real wages? You see, in many jobs, the real wage that people have has been fairly static over the last few years, obviously affected by recession, more recently by the pandemic. But when median real wages barely rise for millions of people, that holds back their spending power. And households just have very low savings. The average level of household savings is often just a few £100s. Many households are just one big bill, when a big extra bill, such as an energy expense, away from having to borrow money. And the UK has relatively high inequality. Inequality of income and wealth is higher than in most high-income countries. Again, I'll show you some data on that in a second. And there's a huge debate in economics about the extent to which inequality holds back growth. And I'm not going to argue too much about that in this video, but it's just something to be aware of. The UK economy also has a high level of debt, household debt in particular, both on consumer credit cards and bank overdrafts and in particular housing market debt. And many argue that our growth is actually held back by the property market. Very high property prices, the high cost of renting reduces the geographical mobility of labour, and we have an economy that's just too dependent on property wealth going up to drive demand. GDP per capita in the UK, according to the latest OECD Going for Growth report, published in the spring of 2021, GDP per capita is 16% lower than the OECD's best performers. The OECD is this, if you like, the club of the leading high-income developed countries. Productivity per hour worked is, again, 10% lower than the best performers. And as a result, the UK gap to the upper half of OECD countries, shown in the middle of that chart there, both in terms of productivity per hour worked and GDP per capita, is getting wider. Now, employment is high. The UK economy has a good record of getting people into work. It's higher than the OECD average, at close to 75-76%. But that's good news. More people in work is good news. But oftentimes that work is relatively unproductive and relatively poorly paid. And I said I'd mentioned inequality. Well, here's a chart, quite a nice infographic, showing that inequality of income in the UK is higher than in most advanced high-income countries. If one takes the quintile distribution, if you're drawing a Lorenz curve, the poorest 20% of households in the UK only take home 6.7% of total income. The UK's Gini coefficient, 2018 or latest year estimate, is 36.6 or 0.36. Of course, the highest figure you can get is 100. That's above the median for advanced countries, although it's significantly below the median for emerging countries there. Well, policies to drive faster, more sustainable and more inclusive growth, in my opinion, need to focus on the causes of growth. And it's interesting, if you're studying macroeconomics, that many of the causes of growth are microeconomic in origin. We often say, for example, that macroeconomics has micro foundations, and slow productivity growth is a key factor. Often that emanates at the level of the firm. Businesses aren't achieving scale economies, or they're not investing enough in the human capital of their labour force, or the quality of management isn't particularly good. You need to really address those micro deficiencies if you want to lift the long-term growth performance of the UK. Huge thanks for joining in. Take care, stay safe, and see you again sometime soon.